this kind of leads into one of the areas of what we look for in DeFi, which is we like to see engagement by crypto native institutions early on, right? It's very hard for the non-crypto native institutions to come in. There's a big regulatory hurdle. Happy to dive into that later and how we can solve that regulatory hurdle. But for now, you need the crypto native institutions that are the large players in a lot of these DeFi protocols to be interested in using the product early on. And that's a very good initial way to gain traction early on in a protocol's life.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
I've got Evan Mair from Gumi Cryptos Capital, which is a venture capital firm in the DeFi, crypto, and NFT space. And I'm excited to learn kind of about how they operate as a firm in this space, what they think of what's going on in this space, kind of their feel on what's going on in DeFi and crypto in general, and what they look for in projects and companies in which they invest. So Evan, thank you so much for joining us. Appreciate you coming on board. And if you could, tell us a little bit about your...
I grew up in the Midwest in Minneapolis. Minnesota was always very entrepreneurial myself and made it a gold mine to get to San Francisco and work with entrepreneurs when I grew up. So I had this idea in my head from a young age, made my way out to California for college, went to USC in Los Angeles. While there is actually where I discovered crypto. I played online poker to earn some extra money on the side and got exposed to Bitcoin. I think this was back in like 2014, 2015. Of course, wish I had held on to more of that instead of cashing it out for beer money.
Don't we all?
Alas. So I was exposed back then, kind of fell down the crypto rabbit hole. I was studying finance and economics. And as I said, I kind of wanted to work with entrepreneurs, and by that time had identified that venture was probably a good place to start to get exposure to a lot of different entrepreneurs and firms and company types. Out of school was a little hard to break right in, so I did a little bit of traditional finance. I worked at a boutique investment bank here in San Francisco for a little over a year, and then I joined Gumi Cryptos Capital in 2018, the week that Bitcoin, after it had been ranging around 6,500, dropped to, I think, 4,000, and everyone lost their minds kind of towards the bottom of that 2018, 2019 bear market.
That's a fun time to start.
Yeah, absolutely. Family and friends saying, "Are you sure you should be doing this?" And I'm like, "Yeah, buy more.
Well, that is the bottom, right? I mean, that was great advice then.
Yes. So that's my general background and how I got into the space. I've been working here for almost 5 years now. Really like it. We have a little bit more on the firm. Gumi is a public game company in Japan that we share our name with. They seed our first fund as they were kind of exploring the crypto space. The two founders of that first fund, Hirono Kunimitsu, the CEO of Gumi, who took it public, and Ray Zhang, who is the managing partner of the fund now. They founded the fund kind of end of 2017 and into 2018, raised that capital, and I joined afterwards. That was about a $20 million fund, and then now we're operating on our second fund, which is over $100 million.
Nice.
And really, one thing I do want to stress too is that we are not a gaming fund. We're a blockchain and cryptographic asset fund with the fees completely in that space. And So while Gumi is a great support to us, and we're able to leverage them, especially these days, for diligencing our gaming deal investments in the Web3 gaming space, we're kind of like an off balance sheet, completely, financial driven investor that's separate. But we love our relationship with them and are able to leverage them well.
And does the firm operate both in the U.S. and in Japan?
Yes. So from Gumi's perspective, they're mostly in Japan, but do have a US entity. From our fund's perspective, we're operating out of Silicon Valley in our San Francisco office.
Yeah.
We do have a little office in Tokyo as well.
Okay. I want to quickly trip back to your background because I've met a lot of people that said, I knew I wanted to run my own business. I was selling candy in elementary school to the other kids or whatever newspaper route. But you specifically said that you knew you wanted to work with entrepreneurs. And I think you even kind of had in your head something related to venture capital. How the heck does that come about for a kid?
Yeah. I had some family that had lived in San Francisco and had told me about it. I did, group projects from probably the third grade on random events like the Loma Prieta earthquake and Alcatraz and everything here. So I was kind of obsessed with the area. Once I got older, I realized it's kind of the mecca of innovation in the US and probably where I should be going. So that's what drew me to San Francisco specifically.
No, that's very cool. Yeah, I can totally get that. I had I'm much, much older than you. And I had an uncle when I was 14 years old. This is really early days, computers. Took me to a computer show. I was living in Texas, took me to a computer show and bought me a computer. It was called a PET, and it had a cassette deck on it. That's where you stored computing in. And the rest of my life was that, right? So, those early influences of family and friends and the things that kind of get you excited. I totally get that.
And it was that kid selling candy. I got suspended from school once because I'd gotten such a large business going through the hallways in between classes that it became a problem.
That's awesome. Yeah, my son encountered the same thing. So I think he's headed on a similar path. I know, although he has this desire to be a Disney Imagineer. So that's an interesting career path. So yeah, we'll see what happens. All right, cool. So Gumi Cryptos, you guys have like a really fantastic, impressive portfolio. I mean,
Appreciate that.
Like some of the biggest names in the business. One Inch, Yield Guild, who I'm really a fan of. I just interviewed the iPoor folks. Just some really powerful names in the business and quite a bit of variety. Can you kind of walk through it? Do you guys have kind of an investment thesis in each category? Is it really both mainly about kind of the business fundamentals of the projects, or talk to me about how you guys think about investing in this space and approach it? And has that evolved since 2018? I'm assuming it has, but just curious.
It definitely has. I think you also had Hash Flow on recently.
Yeah, absolutely. Which is actually a really cool project. And he's based here in Miami. So I need to get with them in person.
Yeah, it's great to see some more portfolio on the show. But yes, in general, one of the problems I see in DeFi is that a lot of teams don't build a product for a problem that exists or into a demand base that exists. So really what we look for is those two things, right? Are you solving a problem that currently exists on the market or solving some demand that exists on the market? If not, are you creating some sort of novel mechanism that can't be created elsewhere that could create demand? So we really come from a first principles approach of, are you creating something of value today or that could have substantial value in the future? Not kind of Ponzi-nomics and more degen stuff, although that is fun to play with. We're not investing our LP money in that stuff. That's more on the side.
Sure.
Obviously, just like in most venture, team is the most important. So we want to find teams that, in DeFi, it's interesting because you can get very unique backgrounds of teams. Some of the most successful protocols are founded by people who I think like started energy drink companies or, worked in random consulting areas in the past that have nothing to do with crypto yet come on to build these great companies. So really a lot about a mindset and then technical ability as well. I'd say these days our focus has shifted, especially given the participants in DeFi, to be more around a few key areas. So one definitely has to be very novel. If you look at our recent DeFi investments in Mangrove and Panoptic, very novel mechanisms for how they build their markets. Happy to dive into those.
Yeah, I was about to say I'd love to. I haven't heard about them.
Yes. So let's break down two very novel mechanisms. So one is Mangrove. It's a zero TVL order book based DEX built on layer twos.
Wow.
What does zero TVL mean? It means that the TVL literally doesn't sit in the DEX. What the DEX contains is promises of liquidity. And that means that liquidity sits anywhere else, in a money market, in AMM, and any arbitrary smart contracts. And when the order is actually matched and is ready for execution, the router contract that points to that capital pulls it back into the system and executes the order. Very simple example, right? I have an ETH limit order, right? I want to buy 10 ETH at $1,000 in ETH. So I put 10,000 USDC in, usually in an order book model that just sits in the order book until it executes or doesn't execute, right? In the main model, that capital can be partially used to loan out in Aave to earn interest, and partially used in, Uniswap to make markets. And then once that order is actually ready to be executed, the capital can be withdrawn and used to fulfill the order.
Oh, that's brilliant. Wait, so sorry, they're interacting with the smart contracts of other protocols.
Yes, they build connector contracts to each protocol that basically you pre-sign a message that says, if this gets matched, you have the right to pull the capital from this contract, this arbitrary contract on my behalf. And it goes through their router contract in the middle that's connected to all these protocols and then back into the protocol itself.
I'm making notes here because I really want to check this out. And so essentially Mangrove is saying, hey, you can be prepared to take a trade at X price that you know you want to execute at some point, but why have your money sit idle? You can actually be earning or doing something else with your tokens in the meantime until it's time to execute that trade.
That's correct. And that's one of the fundamental innovations. They actually have two. The other is their programmatic orders, which are a big innovation, especially for market makers, which effectively allow you to create and place new orders based on what happens to old orders. So you could do things as a market maker, like say, my capital's sitting here. If the order executes, pull it in, and then place an order on the other side of the book at this price, right? So you can dynamically change your orders and program them in a way where you can make markets a lot more efficiently. And this kind of leads into one of the areas of what we look for in DeFi, which is we like to see engagement by crypto native institutions early on, right? It's very hard for the non-crypto native institutions to come in. There's a big regulatory hurdle. Happy to dive into that later and how we can solve that regulatory hurdle. But for now, you need the crypto native institutions that are the large players in a lot of these DeFi protocols to be interested in using the product early on. And that's a very good initial way to gain traction early on in a protocol's life.
Yeah, I really like that. And I certainly can see that there are probably some other uses for the programmatic orders capability beyond just market makers, right? I'm assuming they're still limited by the speed of the blockchain to execute those orders, or is there some mechanism there that's allowing them to operate a little more rapidly than normal for some reason on the chain?
They're obviously deployed mostly on L2s and highly scalable.
Cool.
So
okay,
yeah,
that's fascinating. I may have something I want to do with that. So I'm really fascinated by that one. I'm definitely going to check that out. That's got
after. I'm sure they'd love to come on the show.
Oh yeah, let's do that. Absolutely. All right. So talk to me about Panoptic.
Yep. So Panoptic, another very novel mechanism trying to solve the problem of liquidity in options markets, right? We've seen many options protocols come along, right? I think the most successful version has been Open and what they did with Ribbon Finance, kind of on the structured product side, right? So Open created one of the first option settlement protocols, right? One of the big problems they faced was the liquidity problem of solving across different strike prices and expiration dates and trading those assets in AMMs and providing liquidity. And it just was kind of a mess. And one way they solved that was working with Ribbon on structured products, which is, Ribbon effectively engages with market makers, institutions, sells a lot of options on behalf of users to pull liquidity in, and then facilitates that liquidity problem there. Now that scaled to a good amount. I think at one point they had one with 300 million in any given week of TVL in the pools based on how many options were being sold.
Right.
That scaled well, but it still didn't really solve the liquidity problem. It just shifted the liquidity problem to be someone else's problem in a centralized manner.
Right.
Well, I still love that product and used it. The fundamental innovation Panoptic has created is this idea that you can sell options to no one. And, we back founders who like them to have these visionary ideas that kind of blow our mind, and then we say, prove it, right? So their idea, you can sell options to no one. We're like, okay, how the hell do you do that? So this came out of a couple of years of research out of Cornell on options positions, specifically how placing in and taking out liquidity in Uniswap v3 is similar to selling and buying options. So if you place liquidity into Uniswap v3 above the current price, in a range above the current price, like selling a call, below it's like selling a put.
That's really stupidly simple. I mean, I don't mean that what they're doing is stupid. I just mean that, holy crap, when you think about that. Go ahead. Sorry.
No, it is. And it's genius sitting right in front of it.
Yeah.
So
I think beautiful.
The real thing that they did through their research that was impressive was they figured out how to create perpetual options positions by creating a liquidity layer on top of Uniswap v3 where you borrow capital from it and place it in to sell an option to no one, right? You're just borrowing onto the capital. But really the perpetual option that they creates, the payoff, which the premium you pay is effectively a continuous premium based on the amount of fees accrued in that position, right? And that payoff over a long enough period of time actually almost perfectly traces the Black-Scholes model of creating options premiums. Or valuing options and understanding their premiums. So they're able to create a options model through taking liquidity out of this pool, placing it into Uniswap, and then if you want to buy, you basically take that liquidity and put it back in the pool options that allow market makers then to quote unquote sell options to no one initially, and then once an option has been sold to no one, you can have a buyer on the other side come in and take that liquidity and bring it back out into the Panoptic pool.
That's very cool. That's really awesome. Wow.
And so that solves obviously the liquidity problems. That solves kind of the duration mismatch between buyers and sellers of options, and creates these perpetual options that in theory should end up costing the same amount as regular expiring options.
That's fascinating. All right, so those are two amazing. Are both of those launched?
Both have not launched yet. Both are planning to launch this year.
Okay, very cool. I think those are beautiful examples of what you were talking about how you guys are focusing on your investments. I think those are fantastic. All right, so you're really looking for really smart teams, novel mechanisms. You mentioned tech chops. Are members of your team also highly technical, and so they can actually weigh in on that? What is that process like from a diligence perspective?
Yep. So some of our team is technical. I wouldn't say we're quote unquote highly technical, although we've gotten to a point of familiarity over 5 years now where we can understand how smart contracts interact with each other, what risks exist in those interactions. And we work with some external teams at Stanford and elsewhere.
Nice.
Kind of the deeper tech diligence when required for deep tech situations. But mostly we're able to understand and analyze the technical architecture and makeup of especially DeFi products these days ourselves.
In terms of, okay, so you're not necessarily locked into particular verticals within crypto and DeFi at all, right? You're not like solely leveraging DeFi and NFTs or leveraging, trading oriented platforms. You guys are really looking from an innovation perspective that steps outside of kind of the normal models that we already see now in the space. I'm assuming that's kind of how you're looking at it.
So since our inception in 2018, not just in DeFi, but our entire thesis has been a broad portfolio construction thesis, where we essentially lay out areas that we think could have significant traction or novel concepts that couldn't be created elsewhere. We want to place capital in each of those kind of buckets. Obviously, DeFi is one bucket that you can segment, but we tend not to try and segment it too much. We obviously want exposure to kind of like the key financial elements. So like some sort of spot trading, some sort of like yield generation, some sort of options, maybe some sort of leverage protocol. But we tend to keep a very open mind and just look for these very novel things. Because it's not like we're going on and saying like, oh, we want to back a zero TVL DEX because we didn't know that there was a zero TVL DEX, so this was possible until we talked to Mangrove.
Right.
We knew we wanted options, but if we would have bucketed ourselves into saying we want to place capital in options, we might have placed one in one of the 100 options protocols that exist now that aren't as novel, right? So we tried not to bucket ourselves, keep a very open mind, and have a very broad portfolio construction, and then go out and search for very interesting companies that could potentially fit in those buckets, and then allocate capital that way.
Yeah, that's really I really like that approach. And from my perspective, being if I were on your side of it, I would enjoy that approach because it lets you play in everything.
Yes,
It lets you experience and get your mind blown on all kinds of facets of the market. You guys are exclusively crypto though, right? Or do you also invest outside of that?
We are crypto and blockchain focused. We do equity businesses that are operating in the ecosystem. We're not a token only fund.
Okay.
Structured pure play venture. So we're not buying any liquid tokens after they're launched. We're only investing in venture rounds, kind of helping companies develop product and token models, getting them to product market fit, helping them establish partnerships, getting them to the point where they have a plan to properly decentralize, then execute on that plan, and then eventually, execute on governance as well.
In terms of I should have asked this earlier. What kind of deal stage are you guys coming in for deals?
Well, mostly focused on pre-seed and seed stage rounds.
Okay.
We might invest anywhere from a few $100,000 to a few $1 million. We tend to lead more than follow in the second fund, and we also do follow-on investments into our companies.
Into your existing portfolio. That's great. All right. So I'd almost just spend the entire time just going through your portfolio companies because there's so many I know, but so many that are new to me. I'm pretty fascinated. But I mean, you guys, OpenSea. Oh, you know what? Let's do a diversion real quick because I'm curious about Agoric.
Yes.
I've actually talked about Agoric because I was actually pretty impressed with. I make fun of Algorand all the time, and I don't make fun of them for their tech. I've done a little bit of a dive into their tech in the past, but that's not why I make fun of them. The reason I make fun of them is because I think they're really horrible at identifying who they need to be targeting right now. And one of the things that most impressed me about Agoric when I went to their website was they had enough sense to make their entire website focused and targeting the developers they need to actually grow and build what they're building. And they were emphasizing the value that how they built Agoric and how that is valuable to developers. And the target market could be much broader than the existing pool of developers in the world, which is something Algorand should be doing. So I've always been, for some reason, it's interesting that Agoric is there because I'm constantly, well, not constantly, but I have repeatedly in the past compared Agoric and Algorand from a marketing perspective, because it frustrates me so much to see so much money piling into Algorand and so much wasted opportunity. And I'm not going to make you comment on that. You can just comment on how great Agoric is if you like.
Yeah, no, I think Dean, Mike, and the entire team there have done a really good job. Obviously, Marcus Miller, one of the kind of fathers of JavaScript, is also a part of that founding team. And yeah, really the thesis there was there's 20 plus million JavaScript developers. At the time we invested, there were maybe 5,000 Solidity developers, right? How do we bring this group of developers that know one language but not Solidity into smart contracting? How do we do it in a manner where code is reusable and safe, right? It's kind of battle tested and safe. And then also, how do we implement that on our own chain? And that's what they set out to do. And I think they've done a pretty good job of doing it so far.
Is that your only chain investment?
We invested in Space Mesh back in 2018. That was before I joined.
Okay.
That's a layer one with a proof of space time consensus mechanism. But sure, yes, we're up on the stack for sure.
Do you? It's funny because this morning I don't know. I was going through my normal news feed before my lunch show. I saw yet another layer one announcing a launch, and something I hadn't heard of before. And I think something like Agoric has incredible power and capability to really get further into the market because of the JavaScript capability. But I also worry that we're getting so crowded at that level and in that space from a targeting perspective that there's going to be tech that gets lost in the shuffle. And I'm just curious what your thoughts are on all the L1s and frankly L2s that are launching left and right. And do you think that you guys are going to see a consolidation? I mean, it's kind of obvious that some will die off, but where do you think they go from here in terms of being able to get market penetration and traction? And how do you feel? How are the Agoric folks approaching it at this point?
Yeah. Well, to answer the first part of the question, to be honest, I think the only answer any of us can give right now is we don't know.
Right.
I think we tend to subscribe to some of the app chain thesis that they're actually, yes, of course, there will be chains that die off because of inactivity. And yes, there will be some sort of centralization of activity, not of consensus, but of activity on some chains. But that a lot of large applications will choose to deploy their own application-specific chain, L2 / rollup, or do something on their own for scalability reasons, right?
Right.
So, like I said, to be honest, I don't know how this all shakes out. We're definitely placing some bets in kind of the app chain thesis area of deploying application-specific chains. We're also generally not investing in new L1s themselves, but are investing in infrastructure and application layer projects on some new chains that we think have promise. I think most recently those have been, the Move ecosystem chains and Aptos and Sui.
What are your thoughts on those chains? I did see that you had tweeted about Ethos Wallet investment.
Yep.
Talk to me. I since their initial launch, I haven't heard a lot about Sui and Move. It sounds like there's an incredible amount of promise in terms of that as opposed to Solidity. But I'm just kind of curious. I haven't taken a deep dive into those. What are you guys seeing in that tech and in that space that's attracting you?
Yeah, I'll preface this by saying, like, internally, we definitely have some differences on the areas we think these chains could excel in. And I think that's healthy, right? I think,
yeah, absolutely.
I think Ben Horowitz said it, like, if everyone in your investment committee is agreeing on everything, then you only need one of you, right?
That's a great line.
I'll speak from my personal thoughts, which is that when I look at the two chains, I see Aptos potentially more as a finance and DeFi chain, and Sway more as a consumer-facing chain. And the reason being, I think Sway does a really good job with their object orientation model of how they handle specific assets, specifically like NFTs and kind of consumer-facing assets that they directly interact with, and the permissions around those, how those are manipulated or changed, and how the security model works around those assets.
Right.
Whereas I think Aptos is a little bit more, or a little bit better designed for high-performance DeFi applications. And so, like, if you look at our portfolio, we did Ethos Wallet on Sui, and we did Theorem, which is central limit order book infrastructure on Aptos, right?
Nice.
So,
nice.
Again, could be totally wrong, right? I think
sure.
Aptos has also had some struggles in their DeFi ecosystem with a lot of rug pulls early on, right? You haven't. Right? That's not the fault of Aptos.
Yeah, that's not the chain. The chain's not saying, come to us, rug pullers, please, scammers. We're looking for scammers.
But one hurdle they have to get over. So we'll see how it all plays out. But that's how I'm kind of thinking about it now. For those two, I think in general we want DeFi applications to have a multi-chain experience, right? Kind of meet users where they are. I think users will be on multiple different chains for multiple reasons. And like, there might be a chain that's really good for gaming, but gamers are also going to probably use DeFi. So like, there's going to have to be DeFi there too.
Yeah, from there to there, right?
Exactly. And you don't always want to be switching from chain to chain to chain. So it's it's generally better to be in a lot of different places than to be in a few different places, and that's what we tend to tell portfolio companies and help builders. But obviously, early on, you want to focus on maybe getting traction on a few chains first before you go too crazy, a la Sushi Swap going on every chain that exists.
Well, thanks for that segue. Speaking of Sushi Swap, you guys are solely focused, as am I, from an investment and income perspective on this space. And we're all feeling a significant amount of pressure at the moment in the United States and in some other countries from a regulatory perspective. What are your thoughts right now, you, the firm, whatever, in terms of the regulatory picture and what you think it means for you all, short and long term, from an investment perspective? Is everybody a little nervous, or how are you feeling?
Though, I mean, I'd say we're cautiously optimistic, right? I think, open permissionless DeFi should always exist. There's going to be billions of people around the world who can't necessarily prove who they are and need access to basic financial infrastructure. I think that'll be a key part and is a key ethos of crypto, right? But I do actually think, especially in the US, for DeFi to take that next step, we will need quote unquote regulated DeFi, or what I would call, because since DeFi is decentralized, I'm going to call it regulated open finance is the term I started using. What if
I like that? That's a good angle. Go ahead. Sorry.
Yeah, no, but I'm happy to run through the playbook of what that looks like, right? So
sure.
Effectively, what's causing this pressure, right? Let's break it down to first principles. It's regulators don't want you giving money to terrorists, right? That's kind of the base pressure, right? There might be some political parts to this, but really it's regulators want to make sure that money is not getting into the hands of quote unquote bad actors, right? And you generally don't want to be sending money to someone on an OFAC list. And so when you have these open permissionless pools with pseudonymity or anonymity, institutions just aren't going to participate. The risk is too high, right? Even if their cost of capital lower from borrowing from these on-chain entities, they're just not going to do it because of the risk overhead. And so what do we need, right? We need a solution where there's obviously no PII identified on chain, but there's some trusted regulated entity that issues credentials, right? So the way I see this playing out is some company probably that either is a KYC provider or has works closely with the KYC provider goes to a regulator, right? They say, we want to create this system and we need to get your thumbs up. Why do they need to get the thumbs up first? Because of the rest of the playbook I'll expand on later. But first they need to go to the regulator and they need to say, hey, we're going to collect this information and we're going to expose none of it on chain. We're going to retain this information in our database. And if you flag an address as you do at 1% to 2% of transactions, we'll give you plain text information about that user, right? If you give them a ZK proof, you're going to get thrown in jail, right? You can't do zero knowledge or cryptographic proofs to a regulator. They just they won't do it. You need to give them plain text information. Okay. So now that we've set up this model of, okay, we can KYC a user, we can issue them credentials on chain that aren't PII that say something like, US user or non-US user or accredited investor, or whatever criteria you want to have, right?
Right.
Then you go to applications and you say, hey, applications, your total addressable market right now is however much TVL is in DeFi currently, right? Or look at the peak of the last market, right? Maybe it's 5x that in the next cycle or something like that, but you're capped on your total addressable market. What if you could access capital from institutions all over the world that are demanding it? Okay, that's an interesting idea. Maybe we could generate a ton more fees from that. Would you be willing to pay for something that enables those institutions to participate? Yes. Then you go to institutions to say, maybe you would also be willing to pay for something that allows you to access capital at a lower cost of capital because you're able to source it from all over the world in a compliant manner. They might be willing to pay too, right?
Right.
Well, you don't charge the users. The users have an incentive because the yield they'll be able to generate when the demand is coming from institutions is going to be a lot higher, right? There's only so much demand for capital now. It's generally from market makers and everything before that whole space blew up. And now it's kind of just from, degens and traders, right, in the ecosystem now. But if you can expand that demand base, you can increase the yield. So users have an incentive to KYC themselves, not dox themselves, but KYC themselves. They're not doxing themselves on chain, right? Applications and businesses have an incentive to potentially pay for that. Applications because they can increase the fees earned in their protocol. Businesses because they can lower their cost of capital. Businesses obviously want to participate in that ecosystem and borrow from people because that cost is less. And regulators are happy because at the end of the day, if they flag a transaction, they can get plain text info about the user. So while it's moving away from kind of the crypto anarchist view of the space, I never really subscribed to that view as practical. And I think this is kind of a step that we can move towards in DeFi to increase the access to institutions and therefore, 10 or 100x the space. And by the way, I think, one other part of this is, in general in DeFi, we've focused on kind of the maybe 2 million users to this day that have interacted and maybe 10 or 100,000 active users. I think when you bring in regulated entities, the trust in the space actually increases a lot. And there's a lot willing to participate. And oh, by the way, what is the technical lift on the applications? Really, every single application that exists now and has a smart contract working now can fork that out a few lines of code that just reverts a transaction if a user doesn't have a specific credential and set up specific smart contracts for each type of pool they want, whether it's for US users, for credit users, for non-US users, whatever. Just checking that credential and reverting the transaction if that credential is in there. And then further blocking, if that credential is revoked, the ability to do anything but withdraw from the pool, right? And so there's not a lot of technical overhead that's required to implement this. It's really a regulatory issue and solving that regulatory problem with regulators. I think someone's going to build it very soon. And if you are building that, please reach out to me because we'd like to back someone in that space.
That's great. Look, I think people are working on that. I've seen a number of lightweight KYC work being done. I have some friends at a Web3 studio called Layer 3 that are working on a pretty cool KYC solution. Might be interesting for you guys to connect up with them. So I have a couple of questions around that. I think what you have outlined is probably incredibly realistic for what's probably coming. Obviously, it doesn't match kind of with the idea of what DeFi is supposed to be. So I think you're kind of labeling it as open finance is probably a good way to go with it. And I think that I think that definitely dealing with kind of the who's doing what type of transactions, terrorist funding, whatever, is something that's not going away. I wonder though, how you feel about the other regulatory aspects of this that I think we're getting pressure from. And there's a couple of categories here off the top of my head. The first is the concept of protecting users, right? So you mentioned accredited user types versus non-accredited user types. I'm curious how you feel about that in general.
Accreditation is bullshit for the most part of the U.S. because you can buy a lottery ticket, but you can't invest in a startup.
Exactly.
I think it doesn't make sense. I think there are obviously pushes to change that, right? When I was in banking, I had my Series 7. So like if I still had that license, I would be considered accredited under that license, right? So there are ways to change this away from income, which is good. I think we need more progress on that. I'd more highlighted accreditation because it might be a early area that some protocols want to focus on. I hope move away from it, right? And again, to reiterate that I always believe that open permissionless DeFi should still exist alongside the system that I just.
Okay. Do you think it's actually possible for it to exist?
Yes, absolutely.
Okay.
I think it will, and I think it has to because of the amount of people that can satisfy the criteria of regulators, especially in the U.S. when you look globally.
Right. Yeah. No, I totally agree, and I'm certainly glad to hear that. I think I think the two areas where I'm concerned from a regulatory perspective beyond the KYC of bad money are the kind of protect the investor regulatory focus, where the kind of KYC system that you just talked about. I can envision regulators saying, "Oh, that's great. Well, we can also track income levels and investing experience and not let people transact on, options protocols or derivatives of any kind, that kind of thing." And then secondarily, I think there is a I think there's a massive middleman industry in the financial sector that is terrified of blockchain and crypto, because they see their entire income streams potentially being wiped out because the transparent nature of blockchain and crypto, and then the smart contract automation capabilities kind of make them go away. And what I've seen coming out of the SEC, there's a rule up for discussion right now out of the SEC, requiring middlemen and essentially requiring clearinghouse type and oh my God, what is the word? I'm drawing a blank on the custody type solutions that match exactly what people are used to in the existing space. And so I think those two are going to be pretty big hurdles for open finance and DeFi going forward in this country. I'm curious what you think, but I'm not sure there's much more to think except, I think it's going to be a tough fight.
I concur with what you're saying. What I'd also add is like that we're still not to the point where regulators fully understand the technology. I think Congress is starting to get there, and the House in the U.S. is starting to get there. In terms of understanding, we've seen a big increase in knowledge over the last, call it 3 to 4 years. I think since the last bull run back in 2017, when everyone got excited about this and kind of lobbying came into the space and all that. But I guess one thing that gives me a little hope too is that like some of the regulation that's been pushed forward, I think I'm specifically thinking of like late 2021 regulation around collecting personal information from users transacting as a node operator. It's literally not possible. So
exactly.
The general thing I'm trying to say, the point I'm trying to make is regulators are trying to apply rules that don't work for the space, either because they literally can't be done or because the architecture is so different that it doesn't make sense for it to be done. That I'm less worried about those draconian rules being put in place. Also, one thing we have going for us is that in the US, no politicians can agree on anything, so it's unlikely any bad regulation will come. Unfortunately, it's unlikely any good regulation will come anytime soon. But
true,
so highly unlikely that bad regulation.
Yeah, as long as Congress is divided, we're probably in pretty good shape. That's definitely a good approach. Unfortunately, if you have somebody at the regulatory agencies with broad power, they can regulate by enforcement until somebody reins them in. But I totally agree. One of the things I've been advocating for over and over again, from the perspective of crypto educating politicians, I think we're really missing the boat in terms of our messaging. And I think the messaging needs to flip away from please don't regulate us to death to, hey, we are a better, more transparent method for financial systems than what exists today. And we can eliminate a lot of the problems that exist in the financial system, the slowness of it, the corruption, whatever, the expenses that are taken away from investors by implementing the financial system on blockchain and crypto. And I don't see anybody getting there yet, but that's certainly what I'd love to start seeing in the space.
We started to see a little bit of that after the whole GameStop Robinhood thing. Debacle with shutting people off from buying because of the collateral requirements they had to post. With the clearinghouse, exactly what you're talking about. And efficiencies there. We also started to see it, some wins of this after FTX, right? And the collapse of centralized entities.
There was some good messaging after FTX. You're absolutely right. Yeah.
However, like it hasn't sustained. And that's what you're talking about. We need to sustain that narrative. It can't just be for the month after some catastrophic event that makes us all realize, oh, the system is so messed up. Like, look how we can fix it. And then that goes by.
Yeah, sadly, those 2 million people you spoke about, a big chunk of those want no involvement with politics, which is a little bit of a hurdle to actually getting anywhere. But yeah, totally agree. All right. What is kind of from your perspective, is your deal flow coming from your network in the space or people cold outreaching to you? What do you guys normally do when a deal comes in the door for you? Or how does they come in the door? And then what's the process?
There's a variety of venues that deal flow comes in from. Definitely from our network, right? From our entrepreneurs that we've invested in the past that we have supported and trust us. They pass us great deal flow. our co-investors that we've supported portfolio companies with, we get a lot of deal flow from other investors, personal networks as well in this space. One area I've started to get more from is actually just Twitter, right? I have people reach out to me on Twitter.
Nice.
I like playing around with a lot of random DeFi stuff. So I'll try projects out. I'll jump into Discords. I'll give product feedback. Sometimes that leads into conversations. Sometimes it doesn't. If it does, sometimes they're raising capital eventually and we'll reconnect and everything. So I like playing with products. If you have products that you want feedback on, I've probably used like 150 plus projects at this point. So happy to feedback, and like, it doesn't have to lead to anything. I'm just happy to do that. But
I hate to see the state of your wallets.
I'm loan up gas fees. I'll tell you that. Taxes are definitely interesting. The last couple years.
Right? Yeah, it's brutal.
My dad's a CPA and he's not crypto native, so it's always
that's handy.
That's my plans this weekend too. I've got
there you go.
Much preparation going on. But anyways, so those venues, and then we also do things like attend hackathons, participate in accelerator demo days, things of that nature. Go to conferences and meet people, right? So it's a variety of areas, but more and more post COVID, I've been finding just online areas to meet people. And really, I think what entrepreneurs really appreciate is if you actually care about the products, and now that you're providing feedback, right? They can see, oh, you're actually interested. You're not just trying to make a quick buck on my token.
Did you say that you'll do tokens and or equity type deals? It's not, you're not strictly, I got to have some equity out of a deal.
Correct. So the way we look at it is, most deals these days are equity deal, whether that's, actual price round or a safe valuation cap with sort of token warrant or token element or token conversion, right? Whatever you want to call it. We recognize that early on, companies don't know if they want a token. A lot of companies don't need a token. OpenSea's run a very successful on-chain business without a token for many years that's produced billions and billions of dollars of revenues and value. So we like flexibility, right? We want our entrepreneurs to have flexibility. So we generally like the safe and token warrant model or price round and the equity plus token model because it can allow you to create different value capture mechanisms as you see fit as the project progresses, right? But we do both. We do still do SAFs from time to time. If there's that's usually a little bit later stage, right? I think like 1inch was in that realm where it's like, they've already got a ton of on-chain activity and like they know the token will be the value capture mechanism.
Right.
It's a little easier to do those once it's later stage, if it's for sure a token. But we like flexibility is what I'm trying to say. And I suggest entrepreneurs in the pre-seed and seed stage do a equity plus token warrant mechanism for fundraise.
Yeah, it makes sense. So I'm actually heavily encouraging people not, to look at ways that they don't need a token, but obviously there are some cases where they do. I think there's a lot of interesting models coming out of the space. I've seen some models around structures that are cooperative and NFT and revenue based, as opposed to, traditional equity or tokens. So I think there's some interesting things that are coming out of our space. And I think that's, interestingly enough, a lot of the regulatory fear is making for some really creative funding mechanisms and methods. So I think these whole concepts of these decentralized autonomous organizations and funding mechanisms, everything we're doing in this space already was kind of innovating corporate structures, organizational structures. And now I think the regulatory pressure is going to make it even more interesting. You guys, I'm assuming you invest in companies, projects all over the world. Have you run into issues kind of from a organizational perspective, registration perspective, as you've dealt with kind of DAOs versus corporations, et cetera, that you guys are investing in?
I mean, definitely we've run into some problems more in the past. I think for issuing tokens, there's a few areas that people generally do it, right? It's Cayman, BVI, Gibraltar, and then some organizations are set up in Switzerland, I believe. But so I feel like that's fairly established now. Earlier on, it was a little less known, but teams tend to do that now and don't run into those problems as they have in the past.
Yeah, makes total sense.
Yes, we are more investing all over the world. We tend to one thing we can do with portfolio companies is, given our connection to Gumi, we have really good relationships in Japan, but also Asia as a whole. So we're able to bring portfolio companies into that market fairly effectively. So I'd say our portfolio is overweight in US and Europe, right? And a little bit less, a little underweight in Asia, just because of that value add perspective that we can bring to US European based companies. We also in Africa as well.
Interesting. I assume you guys are so dabbling so much in this space that you're not doing kind of the traditional, hey, let's get on a video call. And are people getting on video calls and running through decks with you, or are you playing with applications and saying, hey, this is really cool?
I mean, there's no one size fits all process, but we actually do think it's very important in the early stage to have entrepreneurs pitch you. Something about a formalization of a process that's important at the earlier stage, because you're going to need it at a later stage. Yeah. So these are things that entrepreneurs can be coachable on. You can teach an entrepreneur how to pitch, but like, you want to know if they're bad at pitching early on, because then that's something you can spend time with them on. That's something we do. I mean, we help design pitch decks. We help run through pitches and formulate it specifically for up round investors, since we've had so many portfolio companies that have gone on to raise A's, B's, C's, whatever. Right. So we do a traditional pitch through the deck. We'll generally have anywhere from like 1 to 6 calls after that, depending on how deep the tech is and how much more diligence we need to do on each specific product. We like to talk to customers if they do have current customers or integrating protocols or things like that. And then, we have our investment committee, a few times a month. We'll give the thumbs up, and then we'll fund the deal. And then post investment support, we like to have at least, one of the 3 of us kind of operating on the day-to-day, talking with them on a, weekly or at most monthly basis to keep track of progress. Sure. Obviously for deals that we're leading, it's a little bit more aggressively hands-on. And for ones where we're a smaller check and they have kind of a larger investor that's more suitable to support them on the week-to-week or month-to-month basis, we'll defer to them. But we definitely try to be as hands-on as possible, at least talk to and support portfolio companies once a month. I think we're up to 70 at this point. So we've each got our bags full of
I was going to say, how do you keep up with that? That's
well, that's the most fun part of the job, I think. So,
yeah. For me, that would be the best part, but still, that's a lot.
Yeah, it is. But it's fun. So like, it doesn't feel as much like work when you're working with entrepreneurs. And hey, that's what I wanted to do the whole time, anyways. So
great. And you said there were two other folks, and we didn't even talk about the partners there. Can you quickly kind of give us, some of their background, or kind of how you guys work together?
Sure. So the most well-known one is Miko Matsumura. He started Crypto Underground in San Francisco in the early 2010s. I can't remember what specific year, but a long time ago. He was early in Sun Microsystems on the Java team, actually.
Oh, nice.
Worked in kind of open source software for the last 30 years, mostly on marketing and developer evangelism side.
Wow, that's a perfect role.
Yeah,
that's awesome. I always love those guys. Go ahead. Sorry.
And then Ray, another one of the partners. He's also a founder himself, has started and exited businesses like Miko has. Also has some traditional finance and consulting experience as well after that. And then he actually invested through Gumi, he ran a VR AR fund, a mobile gaming fund, just a regular gaming fund, before founding Gumi Cryptos Capital in 2018. So he has about, I think, 5 or 6 years of gaming investment experience prior to investing in the crypto space.
Nice. Very nice. Oh, that's cool. That's a great mixed background you guys all have. I like that. I like that team a lot.
That's each other out well, and whatever problem the portfolio company is having, one of us will be able to solve it.
Yeah, I love that one of you is a developer evangelist. That to me is absolutely critical in this space. Are you seeing more and more projects actually starting to think about kind of revenue structures for their projects as opposed to tokens? And how good is this space at thinking through those concepts?
Yeah. Do you mean like full running a token and just issuing dividends on equity and running it on chain?
Yeah. Or having some kind of revenue model for the actual project as opposed to, whatever else it is around tokens or anything else.
Yeah. Oh, absolutely. And most of the projects we end up backing will be generating some sort of revenue. And if there is a token, then the revenue is either flowing to a treasury or flowing to token holders or doing some sort of buyback and make model, or, there's many token models you do after that, but it's all based on producing some sort of value that someone's willing to pay for that you then capture, right?
Right.
That's important these days. I actually gave a panel at Denver on kind of like token value accrual mechanisms, and it's funny because the conclusion of that was like 95% of tokens don't really need to exist.
Yeah. Right.
It's generally the case.
Yeah.
There still are obvious models where you want tokens, and actually, other than the obvious models of wanting tokens, I think there is a large benefit in just having a token version of what kind of looks like equity. I want to not say that explicitly because there's regulatory concerns around that. If
Sure.
a project watching this, you should consult your legal team.
Yeah, you're not an attorney.
I
Not legal advice.
I'm like, a model that works for a token is a model where it has rights to cash flows, right? It's just
Right.
how do you develop that token? How do you properly decentralize first so that it's not a security, right? That's a big issue. But I eventually expect in, call it 10 years, that a lot of tokens will just kind of look like equities, but they're just traded on chain. You can do a lot more things with them. I think a while ago we saw this kind of like liquidity mining phenomenon, and we're seeing companies try to issue equity to early users of platforms. I think Airbnb tried to do that. It didn't work out very well.
Right. That was a train wreck.
Uber, I think, tried to do it, end up just doing like cash bonuses, right? It doesn't work in traditional equities, and it does in tokens. So there's obviously a lot of benefits to tokenizing equity, or creating a equity-like token is what I should say, not tokenizing equity.
Yep.
I think that's what more tokens will start to look like once we figure out this regulatory side, because obviously today you can't just say, hey, this token has rights to cash flows from day one. Everyone.
Yeah. Well, it's interesting. One of our law firms is it also specializes in cooperative law, and so we've been looking really deeply into that structure, because there is a securities exemption validated by the Supreme Court for cooperatives. So we've been looking at that, but that's that's certainly something where you can have token representation, NFT, whatever, that generates revenue. But otherwise, it is a really difficult regulatory wise, if you're going to have publicly available tokens that anybody can get. Of course, then the other side of that is with a cooperative, now you have a membership requirement, and it requires, levels of people. But again, it can't be something that's just like randomly traded and available. So yeah, we have our regulatory dilemmas. It's an interesting thing right now. What are you seeing in the space? Are there trends, technologies, concepts that you're seeing in the space beyond kind of the companies we talked about so far that you guys are excited about?
Yeah. So outside of like novel DeFi, which is kind of my specialty and what I focus on in the fund, so it's what I spend the most time on, but obviously there are other areas as well. I think other areas are super interested in are middleware and developer tools for creating better developer experiences, especially the Solidity ecosystem, where it's a little bit more hardened and has been around for a while, and a lot of those tools exist.
Yep.
To expand on identity too, I think there's a big opportunity. So the identity we described earlier is what I would call hard identity. Like it's just like your KYC, your actual identity information.
Right.
There's also soft identity and reputation. Those are a little bit more crypto native. Those are two areas we're definitely interested in. Soft identity, I would define as kind of Web 2 data and Web 3 on-chain data combined, and like how you create a profile of your online activity, not really like your legal name,
right,
date of birth and all that, but kind of your online activity, and then like how you use different applications, and you can build different applications on top of that, like marketing and customer targeting and attribution of market spend and retention and all that. And there's tons of analytics tools that are building in that area that are super interesting. And there's like the kind of, and then like we backed a company called Interact that's in that area. We've got another one that's not public yet. That's a little bit tangential. That's in that area. So that's one more places of capital. And then there's also the reputational area, right? Those are kind of like the discos of the world that are kind of like the data backpacks, where you have attestations of different interests, and it's all kinds of unstructured data. There's also Intuition is also in that area. That's an interesting project. And so definitely want to like place capital in each of those areas. and even potentially applications built on top of that infrastructure in each of those areas.
That's excellent. No, I think those are, all excellent. I was just talking to, what's the name of the project? Sunshine. I was just talking to the founder of a project that I thought was a fairly ingenious. There's an existing product out there that allows you to subscribe and find out when you have what airdrops you've had coming into your wallets and what things. And they were focused on giving that away for free, and then being a targeting mechanism for projects to reach out to people that match specific patterns. So I love that market, and I think it's a big hole in our market, being able to identify and find users and reach them for protocols. One of the things, sorry, what?
I said it's a huge hole in the anonymous world where you don't know people, and obviously there's some pushback on PII on chain, but there's certain ways to connect socials and understand and monitor Web2 activity and Web3 activity in a responsible manner, especially with zero knowledge, that allow you to kind of target groups of people without potentially revealing the specific activities they've taken on.
Exactly. Yeah, absolutely. How do you guys feel about bridging into the real world fintech, TradFi, Web2, whatever you want to call it? We're cannibalizing, that core user base between protocols right now. And it's everybody trying to suck users and money away from one protocol to their protocol. Are you guys seeing anything that lends you to believe that we're going to start seeing maybe not necessarily, full blown, hey, here, come get your wallet. But hey, this is your finance app where you're tracking your investments. Here's a little bit of crypto involvement that's gatewaying into you.
Well, I mean, so the way we think about it long term is that just like everyone uses the internet all day, every day, and most people don't know what TCP/IP is, and don't know the internet protocols interacting with. The same will be true for crypto, right?
Right.
They'll be interacting through applications and user interfaces that are familiar to them in manners that display things like US dollars, but it will all be settled by crypto rails. So in terms of long term, I think that's how it will look, right? Users won't necessarily say here's your wallet. It's just here's your app that you have everything else in. I know now it's just settling on crypto rails. I think short term, one hot area that I think you're alluding to potentially is kind of RWA, real world assets. That's
sure.
About. My take on that is it's really a regulatory thing. Again, it's not really a technical problem, right? It's just how do we work with regulators and get the appropriate licenses in certain areas to offer certain assets on chain. I'm less interested in how do we tokenize these things. I'm more interested in how do we replace or more efficiently do what is off-chain finance on chain, right?
Right.
Lower the cost. Can we make it more efficient? And obviously there's a lot of pushback, as you were talking about earlier, from the middlemen, because inefficiency creates a lot of money for them.
Sure.
Efficiency is profitable, and right. And so I think there'll definitely be a lot of pushback, and it'll probably take longer than people are expecting, but eventually there will be quote unquote real world assets. I don't really love the term real world, but that financial activities, I would say financial activities that are predominantly occurring off chain will flow to occur on chain because of the efficiencies.
Love it. I think that makes total sense. Is there anything else we should know about you guys and Gumi or you or what you guys are up to before I go to my last two questions that I ask everybody?
Well, I just want to say, again, thanks for having me on. Excited for those last two questions. I have no idea what they are, everyone. So he's going to...
They're not too bad. They don't hurt.
We are actively deploying capital. We'd love to meet entrepreneurs. You can feel free to reach out to me. My email is evan@gumi-cryptos.com.
That's
GUMI-CRYPTOS.com. So feel free to shoot me any projects that you're working on, any thoughts you have on the space. Happy to chat. Even if you're not raising capital, you want product feedback, send it my way. I love nerding out on DeFi stuff.
Nice. And I'll put all of Evan and Evan's contact info and the contact info for the firm in the show notes. So if you're listening to this in the car when you get home, you can pop in and reach out to him.
Yeah. And also follow me on Twitter. I always need more followers.
Let's boost those followers. Go follow Evan. That's awesome.
All right. Your question.
Okay, so first question, and this one you can approach one way or two ways. It's completely up to you. Typically, I ask founders, if you were talking to another founder, what uh, what what have you learned in this process that you would pass on to them to avoid making a mistake that you've made, or a good lesson you've learned about how to do things the right way? In your case, I think you could probably pass a lesson on to founders, but you could also pass a lesson on to the 12-year-old kid that's selling candy at school and thinks he might want to be a venture capitalist someday. So I'll leave it up to you how you want to answer that.
Was it to my former self or to someone else coming into the space?
Someone else that's wanting to enter the space.
Yeah.
But I have a feeling that'd be really interesting to hear what you'd say to your former self.
What I'd say to my former self is keep playing poker. I got really into it when I was like 13, and that's literally why I'm in the cryptos because I was exposed to it. So
That's awesome.
There, but to someone else, I would say like you have to keep an incredibly open mind and flexible mind in terms of understanding these concepts, because there literally is no framework or playbook for how a lot of this stuff is built. It's just completely revolutionary and new. And if you try and bucket it into any past framework of investing or technical analysis or general due diligence, it just doesn't work. So keep as open of mind as you possibly can, and allow the plasticity of your brain to increase as you learn these new concepts and figure out how everything could potentially fit together, because you just can't keep your mind inside of a box. It just doesn't.
Yeah, it's great. I'm always amazed, and I have conversations with people who are in this space who try to keep everything in that box. And I don't know how they do it, because it hurts to try to put things into a box in this space. It's like nothing fits. That's excellent advice. Okay.
But use first principles while you're thinking too.
Yeah, that's good. That's good. Who is a founder or a team in the space that you have a significant amount of respect for, or you think are going to really blow things up?
Yeah. Well, there's so many. The problem is like picking a specific one. I think I should probably keep it in DeFi, just
Cool.
because that's what the focus of the show is. And maybe since people already have context on Mangrove and Panoptic, I will just highlight those two. Both are teams and founders who have incredible academic experience backing their research. They have incredible passion for what they're building. They're mostly building this because they've played around with all this stuff on chain. They've seen these problems that exist, and they want to build a solution not only for themselves, but for everyone else, because they know it will be a public good or a benefit for the space. They've built the right teams around. They both have mindsets. The founders of both those projects have mindsets to build the right teams around them that are crypto native enough to understand what's going on, but also practical enough to get it done. And so you highlight those two teams. Obviously, most of our portfolio I could talk about as incredible founders, but since we've talked about those in the past, I think those qualities are what make those two teams at Mangrove and Panoptic quite special.
That's fantastic. Great. I love it. Evan, thanks so much for coming on today, man. I think we all get a lot from you, and I'll encourage founders that come my way to give you a knock and see what's up with you guys.
Sounds good. Thank you again, Brad. Really appreciate being on.
Thanks, buddy.